Wall Street's roller coaster, a Trump-Zelenskyy showdown. The financial world has always been a place of high stakes and even higher emotions, but recent events have taken things to a whole new level. The markets have been more unpredictable than ever. What is the reason behind this latest turmoil? A showdown between two of the most talked-about leaders in recent history, Donald Trump and Volodymyr Zelenskyy. The Dow Jones Industrial Average, the S&P 500, the Nasdaq. These aren't just numbers or acronyms, they are the pulse of the global economy. When they move, the world pays attention. And lately they've been moving a lot. They sound like exotic cocktails, don't they? Well, mix them together with a shot of Trump and a splash of Zelenskyy and you've got yourself one hell of a volatile cocktail. Imagine a bartender trying to balance the perfect drink while the ingredients keep changing. That's what the stock market has felt like. The financial market has been on a wild ride lately. Traders are on edge, investors are biting their nails, and the charts look like a roller coaster designed by a madman. Every piece of news sends shockwaves through the financial world. It's enough to make your head spin faster than a Trump Tower revolving door. One moment, stocks are soaring. The next, they're plummeting. It's a dizzying experience for even the most seasoned investors. It all started with that little tête-à-tête in the White House. A meeting that was supposed to be routine turned into a spectacle that no one could have predicted. The stakes were high and the tension was palpable. You know the one where Trump and Zelenskyy went at it like a couple of guys arguing over the last slice of pizza? Markets hate uncertainty. And this meeting was the epitome of uncertainty. Investors were left scratching their heads wondering what would come next. And let me tell you, that meeting was about as certain as the weather in a hurricane. One moment, it seemed like things might calm down. The next, it was chaos. The financial world was caught in a storm, and there was no telling when it would end. Stocks initially took a nosedive. The markets reacted swiftly and harshly to the uncertainty. It was as if the floor had dropped out from under them, and there was no safety net in sight. Investors were hitting the sell button faster than Trump tweets out conspiracy theories. Panic set in, and the sell-off was relentless. It was a race to the bottom, and no one wanted to be left holding the bag. But then, just when you thought the bottom was about to fall out, something miraculous happened. The markets, in their unpredictable nature, began to recover. It was a glimmer of hope in an otherwise bleak situation. Well, as miraculous as anything involving Donald Trump can be, the markets recovered. It wasn't a full rebound, but it was enough to stop the bleeding. Investors took a collective sigh of relief. Like Lazarus rising from the dead, they clawed their way back to end the day relatively flat. It was a testament to the resilience of the markets and the unpredictable nature of the financial world. It was a roller coaster ride that left everyone wondering, what the hell just happened? The financial world had been turned upside down, and no one knew what the next twist or turn would bring. One thing was certain though, this was a showdown that would be remembered for a long time. Calming the storm, a Truth Social olive branch. Remember that whole stocks plummeting faster than Rudy Giuliani's credibility thing? It was a chaotic time with investors scrambling and financial analysts predicting doom and gloom. The market was in freefall, and it seemed like there was no end in sight. Well, it turns out that Donald had a trick up his sleeve. Just when everyone thought he was out of surprises, he pulled another rabbit out of his hat. No, not a disappearing Sharpie this time. This time, it was something a bit more substantial, something that actually had the potential to make a difference. Trump, in all his infinite wisdom, decided to grace us with one of his trademark Truth Social posts. But this wasn't just any post, it was one that caught everyone's attention. And wouldn't you know it, this one was actually somewhat presidential. It was a rare moment where he seemed to be channeling the gravitas of the office he once held. Okay, presidential might be a bit of a stretch, but compared to his usual antics, it was a significant departure. Let's just say it was less inflammatory than usual. There were no wild accusations, no name-calling, just a call for calm and reason. He called for peace in Ukraine, sure, but more importantly, he didn't threaten to nuke anyone. It was a measured response to a complex situation, something we don't often see from him. He even managed to refrain from calling Zelenskyy any nasty nicknames. It was a moment of unexpected diplomacy. The market, thirsty for any sign of stability, lapped it up like a thirsty dog in a heat wave. Investors breathed a collective sigh of relief, and for a moment, it seemed like things might just be okay. It was a brief moment of calm in an otherwise turbulent week. A small olive branch extended in the midst of chaos, reminding us that even in the storm there can be moments of peace. Gold, bonds, and the almighty dollar safe havens amidst the storm. When the world gets crazy, investors get scared. The stock market becomes a whirlwind of chaos, with traders frantically trying to make sense of the turmoil. It's a scene of sheer pandemonium where every decision feels like a gamble, and when investors get scared, they run for the hills. They seek refuge from the storm, looking for any sign of stability amidst the financial tempest. It's a flight to safety, a desperate search for solid ground, or, in this case, they run to safe havens. These are the assets that promise security when everything else seems uncertain. They are the financial lifeboats in a sea of volatility. You know, the financial equivalent of hiding under the covers with a flashlight and a good book. It's a comforting thought, isn't it? To have something reliable to hold on to when the world outside is in disarray. Gold, the granddaddy of safe havens, initially surged like a prospector who just struck it rich. Its value shot up, reflecting the collective anxiety of investors seeking a timeless store of value. But then, just as quickly, it fell back down to earth. The glittering promise of gold couldn't sustain its meteoric rise, reminding everyone that even the safest havens have their limits. Oil, that slippery black gold, followed a similar trajectory. It too saw a surge as investors bet on its enduring value, only to experience the inevitable pullback, up 1 minute, down the next. The volatility of oil prices can be dizzying, a roller coaster ride that leaves investors holding on for dear life. It's enough to give you whiplash. The constant ups and downs can be exhausting, testing the resolve of even the most seasoned investors. And then there's the US dollar. Ah, the greenback. The world's reserve currency. In times of uncertainty, the dollar is king. It stands tall as a beacon of stability, a trusted refuge in the storm. In times of uncertainty, the dollar is king. Its strength is a testament to its global dominance, a currency that commands respect and trust. And this week was no different. The dollar soared, reflecting the collective flight to safety. Investors around the world turned to the greenback, seeking its reassuring stability. It soared higher than a bald eagle on the 4th of July. The dollar's rise was a spectacle, a powerful reminder of its enduring appeal. Investors flocked to the safety of the dollar like tourists to a Times Square souvenir shop. In a world of uncertainty, the dollar remains a steadfast choice, a symbol of financial security. Buried treasure: the rise and fall of the rare earth deal. Buried beneath the headlines about Trump and Zelensky's war of words was a story about something near and dear to both their hearts. Money. Specifically, rare earth minerals. You know, those things that make our smartphones, electric cars, and F-35 fighter jets go beep boop. Turns out Ukraine is sitting on a potential gold mine of these critical minerals. And the US, well, they're always in the market for a good deal. So naturally, the two countries were in talks to ink a sweet little agreement. But then the whole Trump-Zelenskyy showdown happened. And like a house of cards in a hurricane, the deal crumbled faster than a stale croissant. It's a shame, really. This could have been a win-win for both countries. Tariff trouble. Trump strikes north and south of the border. Just when you thought it was safe to go back into the North American Free Trade Agreement, Donald Trump throws another grenade into the mix. The man clearly has a flair for the dramatic, doesn't he? In a move that surprised absolutely no one, Trump slapped tariffs on imports from Canada and Mexico. Because, you know, nothing says America first like alienating your closest allies and starting a trade war. The tariffs, which target a range of goods from maple syrup to avocados, are sure to raise prices for American consumers. But hey, at least we'll be sticking it to those Canadians and Mexicans, right? Chip wars, Nvidia in the crosshairs. Remember Nvidia? They make those fancy graphics cards that gamers drool over and that power all those self-driving cars we've been promised. Well, it turns out they've become the latest pawn in Trump's trade war with China. Rumors swirled this week that the Trump administration is considering restricting exports of AI chips to China. And who's one of the biggest players in the AI chip game? You guessed it, Nvidia. The news sent Nvidia's stock price tumbling faster than a Jenga tower after one too many beers. It's a reminder that in the age of global trade wars, even the most innovative companies can get caught in the crossfire. The ghost of stagflation looms large over the US economy. Stagflation, it's a scary word. It conjures up images of long lines at gas stations, sky-high prices, and an economy stuck in neutral. And unfortunately, it's a word that's been thrown around a lot lately. See, the US economy is sending mixed signals. On the one hand, we've got low unemployment and a booming stock market. But on the other hand, we've got rising inflation, sluggish growth, and a trade war with, well, everyone. the latest economic data hasn't done much to calm fears. GDP growth was weaker than expected. Jobless claims ticked up, and inflation, while still relatively low, is starting to rear its ugly head. A fragile alliance, US-Ukraine relations on thin ice. The Trump-Zelenskyy bromance is officially over. The honeymoon period, if you can even call it that, is most definitely a distant memory. These days it's all icy stares, cancelled meetings, and passive-aggressive truth social posts. The whole debacle has left US-Ukraine relations in a precarious position. Zelenskyy is understandably frustrated with Trump's pressure to make a deal with Putin, especially one that doesn't guarantee Ukraine's security. And let's be honest, can you blame him? Trusting Putin to keep his word is like trusting a fox to guard a henhouse. A world on edge, global markets. Brace for impact. So what does all this mean for the global economy? In a word, uncertainty. The Trump-Zelenskyy showdown has injected a healthy dose of volatility into the markets. And with the trade war with China still raging and the US economy sending mixed signals, investors are understandably nervous. The coming weeks and months will be crucial. Will Trump and Zelenskyy be able to patch things up? Will the trade war with China escalate further? Will the US economy slip into stagflation? Stay tuned, folks. It's going to be a bumpy ride.